I think we're at a tipping point in the silver market. And I mean, I think you point to the growing shortage of physical supply at the highest levels, the LBMA, the COMEX, and now even the Shanghai market. They're all showing, stress, if you will, in supply, and the amount of, or the number of deliveries is off the chart. And coupled with, surging demand for things like industrial, investment, central banks, sovereign wealth, the same stuff we've been talking about forever, man. Silver is being pulled from every direction. That's just the bottom line. And not enough talk about it anywhere except on the alternative media channel, so it doesn't gain any traction. But where you will start to see some traction, in my mind, is the fact that the U.S. government just designated it as a critical mineral. And to me, this changes the narrative. Silver is no longer just a commodity. It's a matter of national security, national strategy. And when you talk about the kind of potential that silver has, remember that in terms of market cap, it's the tiniest little nothing market. And when capital begins to flow in, like the United States government and the sovereign wealth fund, it doesn't move gradually, it will erupt at some point. I do believe that. But the bottom line, Jesse, is you got tight supply, you got surging demand at the highest levels, coupled with systemic risk and the LBMA and what could happen if we see a delivery failure, coupled with official recognition. I would say silver isn't just poised to move, it's ready to explode. And yeah, it has been catching its breath, and anything that moved that fast, 40% in a couple of months, is overbought. That's the definition of overbought, and it needed to correct. It did, and here we are back above 50 again. So yeah, I say buckle up for what's coming next. Look, I'm not trying to be anything other than honest. Either many of the things I say, people could say I'm stupid for saying them, or maybe I just have the courage to say what I believe. And I have been saying this on your show for a long time. This is confirmation of what I've been saying. The fact that the U.S. just named silver a critical mineral, along with China's tightening exports, there's no coincidence there. This is governments recognizing, I think, silver's strategic importance. Go back a year or two, Canada. Many of the miners and players in the silver market in Canada tried to do the same thing, to have it reclassified a strategic metal, not an industrial metal. But this is an understanding, an awakening. It means a floor has been put under demand, number one. You have policy-driven buying now that will be coming in from the U.S. and from other countries like China, who will see that this is musical chairs, if you will. And at the same time, you have a global supply crunch. You got players getting squeezed. And you get China, who is, a big player in the silver market, limiting exports. Yeah, that's a big deal. Now, silver isn't just an industrial metal anymore, Jesse. It's obviously strategic, and it's monetary. It's essential. And I think now that governments are making that official, I think from the highest levels, maybe governments just lit the fuse. So yeah, I think it's a big deal. It's a huge deal, bigger than just about anything I've seen in a long time in the silver market. We know that India has been a massive player in the silver market. You can find quotes that it's purchased between 6, 7, 800 million ounces in the last 5 or 6 years. Copious amounts. We know that Russia said we're going to add it to our strategic stockpile, being one of the first countries ever to say that. We see massive deliveries. Talk to David Jensen on the COMEX, the LBMA numbers. Huge deliveries coming off the LBMA in a hugely rehypothecated market where way more contracts exist than bars standing behind it. To your point, we saw Saudi Arabia jump in, and I think it bummed a lot of people out that they bought SLV, but the amount that they bought in SLV allows them to actually stand for delivery. I think there are a lot more countries that have been doing this just on the down low than we are led to believe. You look at China as the second largest producer in the world, flying all around South America, going directly to the miners. Sean Kuhn has talked about this, CEO Dolly Varden, where they go right to the miners, disintermediating the marketplace, buying doré and concentrate right from the miners, paying double what the West will, and sending it back to China to refine it. They control the majority of all the metal refining and rare earth refining, so they just put it on a barge and send it on back to China. But it's coming from the second largest producer in the world. So that should put a little bit of context into it. If they're making that much or producing that much, Why fly all the way to South America to pay double what the West will to buy doré and concentrate and send it back for refining? I think you will see that. I think it's been there under the surface if you really dig. But I think a lot of countries, especially those in the BRICS, have understood that silver and gold. This is a race for the world's commodities. And it's not just the precious metals. It's the base metals. It's the soft commodities. He or she who has the gold makes the rules is how it used to be. How about he or she who has all the world's commodities makes the rules in the coming future? And I think that's what you're seeing. So yes, I do think you'll see more countries and sovereign wealth funds probably at some point. It'll be more transparent what they're doing. But in a world where information travels so quickly, it doesn't behoove any of these players to let anyone know just how much silver they're gathering. And then look at the U.S. I mean, I don't care what anyone says. It ain't about tariffs. I've been saying that for a year now. It is not about tariffs. It is not about arbitrage. Sure, there's a little bit of that truth, but it's being reshored. And, I've been screaming this. Look, all this silver coming into the country can't just be about tariffs. That was the ruse to get it all back. Some of it's flowed back to ease the burden at the LBMA. But what it really is the smart money trading ahead of the news. Like, they knew that this was going to happen. They knew that it was going to be reclassified a critical mineral. So what do? They reshore it. They say it's tariffs so that London releases it and Switzerland sends it. Oh, by the way, it's reclassified. I mean, everything that at that level that they do, you look at all the massive gold accumulation in 2016, 17, 18, and 19, and then the Basel III reclassification of gold. These things that at the highest level, information is worth more than anything. And the people accumulating it, the central banks, the sovereign wealth funds, they're not just the most well-funded. More importantly, Jess, they're the most well-informed. And I think that's really what you would expect to see, the inside money moving first. And I think we're transitioning to that point where it's now out in the open, at least more so than it's ever been. And at that point, it's anonymity be damned. It's everyone rush to secure what they can while they can. So yeah, I think you will see that.
I think we're standing at the edge of one of the biggest tipping points the silver market has ever seen. Not a bump, not a correction, a full-blown, once-in-a-generation realignment. You can feel it in the numbers. You can see it in the movement of physical metal. The London Bullion Market Association, LBMA, the COMEX, even the Shanghai Futures Exchange. All of them are showing visible stress. The inventories are thinning out, deliveries are exploding, and yet the mainstream media is pretending everything's fine. The average investor has no clue that the foundation of the global silver market is starting to crack. But you, the viewers who've been paying attention, you know the story doesn't end with another quiet cycle. It ends with a repricing event so violent that people will look back and say, how did nobody see this coming? Because the truth is, there's not enough physical silver to cover all the paper claims floating around. There never has been. It's a system that's been running on borrowed time and borrowed metal. Let's talk about what's really happening. Silver is being pulled from every direction. Industrial demand has gone parabolic. Solar, EVs, AI data centers, even new green hydrogen technology, all of it needs silver. Then you've got monetary demand, central banks, sovereign wealth funds, and private investors. They're all competing for the same shrinking pile of physical supply. This isn't a demand story that's going to fade with a rate hike or a new tech fad. It's structural. For years, we've been told that silver is just a commodity, an industrial input like copper or zinc. But that narrative just got blown apart. The U.S. government officially designated silver a critical mineral. That may sound like bureaucratic jargon, but it's not. It's a game changer. It means silver isn't just a metal anymore. It's a matter of national security. And when something becomes a strategic asset, everything changes. How it's traded, how it's regulated, how it's hoarded. Let me put this in perspective. The entire above-ground silver market is smaller than the market cap of one mid-tier tech stock. It's microscopic. So when major capital, think sovereign wealth funds, think government buyers, starts to flow in, it doesn't nudge the price. It detonates it. Silver doesn't rise gradually, it erupts. That's why I keep saying we're not talking about a commodity cycle here. We're talking about a revaluation. Now, if you follow the physical markets, you'll know that the amount of silver leaving the LBMA and COMEX vaults has been staggering. We're talking record levels of physical delivery in markets that were never designed for it. These exchanges were supposed to settle mostly in cash, not metal. Yet month after month, we're seeing more entities standing for delivery, taking bars out of the system. That's the tell. The smart money doesn't want promises anymore. They want metal. And then there's Shanghai. Even that market, which used to be the world's physical anchor for silver, is showing strain. Stocks in the Shanghai Futures Exchange have dropped perilously close to 600 tons. That's considered the bare minimum liquidity needed to back the market. Once you breach that level, you risk a delivery default. And when that happens, you're not just talking about volatility, you're talking about panic. Now throw China's latest policy move into the mix. They've just started restricting silver exports. Think about that. The largest refining hub in the world, with 18 LBMA certified refineries, is locking the gates. That's the sound of the drawbridge going up before the storm hits. It's the same playbook we saw when they began stockpiling gold years ago. Quiet accumulation, then capital control. At the same time, the US declares silver a strategic mineral. China's locking down supply. Russia's adding silver to its strategic reserves. India, the world's hungriest silver buyer, has imported somewhere between 600 and 800 million ounces in the last few years. The world's largest players are moving in sync. That's not coincidence. That's coordination. This is what I've been warning about. The transition from silver being just another metal to being a geopolitical asset. It's no longer about the minting of coins or jewelry. It's about who controls the building blocks of modern industry and the monetary future. And if you think that sounds dramatic, consider this. The last time silver was treated as a strategic resource on this level was during wartime. We're talking 1940s level urgency. But this time, it's an economic war.
I've never seen before in my career, and I've talked a little bit about this, but it's worth mentioning to your listeners. Look, in my career, almost 36 years, I've never seen Wall Street or Main Street acquiesce to anything other than 5% of gold, of an asset, a portfolio rather, being in gold. And it was acquiescing at best. Fine, put 5% of your money in gold. Now, recently we've seen the chief investment officer of Morgan Stanley say, no, sell half your bonds and buy gold. Their new platform, according to him, is 60 stock, 20 bond, 20 gold. You got Michael Hartnett, the chief analyst for Bank of America, with this very, very, very expensive newsletter that goes directly to the institutional trader. It's like many thousands of dollars a year. He's saying, no, it's 25, 25, 25, 25, 25 gold, stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach, the bond king, saying, no, Monday morning, 25% in gold is not overweight. And then the 6,600 part, that's Jeffries. They used to be a primary distributor for all the world's mints. And they said 6,600 is their next target, at least intermediary target, for where they expect gold to go before it takes a little bit of a breather. You have massive institutional money, traders and analysts and chief investment officers speaking to the most sophisticated traders in North America, saying 25% of your portfolio in gold is not too much. I mean, that's just insanity, if you ask me. Goldman Sachs said, if 5% of the money comes out of the bond market because they fear that there is no independence on the Fed anymore, that gold would go to 5,000 like that. Well, when you have Stephen Mirren sitting in the Fed, who it was Trump's advisor and the architect of the Mar-a-Lago Accord, he fills the vacated spot. What independence? The Fed has no independence. So gold is moving in that direction. You got Bank of America just saying $67 for silver is their target for next year. So when we talk about record highs around 4,400 gold and then it falling off and everyone's saying it's over, I find it disingenuous at best when you have these analysts saying this. And here we are back up above $4,100, and that shows the strength and the underlying support. So gold's held up because of central bank accumulation. And to me, that's what we've been saying forever. We've seen physical demand rising and global monetary stress increasing, all of the stuff that we talk about. But what I believe we are seeing, kind of what we were just talking about, is a slow motion global run on physical gold. And the pullback from those highs wasn't a breakdown, it was a consolidation. Catching its breath, not throwing in the towel. Pick your euphemism, but the bottom line is gold isn't just strong, it's structurally more attractive than many people realize. And I think that the recent pause is the calm before the next leg higher. That I do believe. And maybe this is it here today as we're up over $100 as we're talking. So the awakening has started. You know, my whole career, gold and silver were dismissed as relics. And, you know, even when you try to get a bank account in the precious metals industry, at least for many years, you were lumped in with marijuana dispensaries, strip clubs, liquor stores, gambling casinos, kind of thing where, you know, it's very fringe and very speculative and dismissive at best. And I think that's all part of the game, you know, to push everyone into a system that is dominated by Wall Street and paper promises. But now Costco and Walmart, to your point, sell bullion, and even the media talks about dollar debasement. That's not normal. None of that is. That's all new. I would argue, to your point, we are in the early stages of a monetary reawakening because people feel something is broken.
Let me level with you. What we're seeing right now in silver isn't an accident, and it isn't temporary. It's the inevitable result of years, decades of manipulation, neglect, and monetary arrogance finally meeting physical reality. The paper markets have done a masterful job suppressing price discovery, but they can't print silver. Think about it. In a world where every commodity has a futures market, the one metal with the tightest supply-demand balance is the one with the heaviest paper trading. That's not coincidence. That's engineering. It's been a pressure valve, keeping silver artificially cheap to keep the monetary system stable. But now the valve's breaking. I've said before that silver is like gold's wilder younger brother. Smaller, faster, more volatile. When gold moves, silver runs. When gold pauses, silver breathes. And right now, silver's about to sprint. Because unlike gold, silver's dual identity as both industrial metal and monetary metal makes it the perfect storm asset. You've got the green revolution, solar panels, EV batteries, 5G infrastructure, all requiring silver. You've got the monetary awakening, central banks diversifying out of dollars and into tangible reserves. You've got individual investors buying more bullion than ever. And now you've got governments officially labeling it critical. That's a 4-lane highway of demand feeding into a 1-lane supply road. And the supply side? It's worse than anyone's admitting. Most silver isn't mined directly. It's a byproduct of copper, lead, and zinc mining. That means silver supply doesn't respond to silver prices. It responds to industrial metals demand. Even if silver doubles, the miners won't double output unless copper and zinc prices justify it. That's why silver shortages can't be fixed quickly. It's trapped in the wrong part of the mining economy. Meanwhile, refineries are maxed out processing gold because that's where the profit is. So when you combine that with export restrictions from China, the world's biggest refining hub, you've got the perfect supply choke. And here's where things get interesting. The people who really understand this, the central banks, the sovereign funds, the inside money, they've already moved. The reclassification of silver in the US didn't happen by chance. That's not a decision that gets made overnight. That's years of planning, lobbying, and intelligence briefings. So when you see billions of ounces suddenly flowing into the US over the last 12 to 18 months, under the excuse of tariff arbitrage, understand what's really happening. They weren't moving metal for economic efficiency. They were moving it for national security. They knew this was coming. And I'll say this again. The people accumulating at these levels aren't doing it for speculation. They're not chasing a trade. They're securing survival. The US can't afford to be caught short on silver. Not when every advanced technology it depends on needs it. Not when China is locking up supply. So, reclassifying silver as critical is the first step in what I believe will become full-blown strategic stockpiling. Mark my words, in the next phase, you'll start to see government contracts for silver stockpiles the way you see for oil reserves. It'll be treated like energy, because in a world of electrification, it is energy. Now let's zoom out. Look at the global picture. India, as I said, has been buying record amounts, hundreds of millions of ounces in just a few years. Russia has declared silver part of its strategic metals reserve. China is not only the second largest producer, but also the largest refiner and exporter. Now limiting exports. Saudi Arabia, after years of silence, suddenly buys into SLV. People mocked them for that, said, why would they buy paper silver? But that's missing the point. Their purchase size was large enough to stand for delivery. That's the move. That's how you drain the vaults quietly. And then you've got the BRICS Alliance, building an alternative settlement system based on commodities, not dollars. Gold will be the foundation, yes, but silver will be the circuitry, literally and figuratively. It's the bridge between hard money and industrial power. The West is sleepwalking into a commodities trap. While we're debating interest rate cuts and inflation targets, the rest of the world is locking down resources. Africa is booming with Chinese infrastructure investment. South America's mines are being quietly cornered by Asian capital. And here we are, still pretending we can print prosperity. The irony? Silver, this humble, overlooked metal, might be the very thing that exposes the system's weakness. Because when there's a delivery failure on a major exchange like the LBMA or COMEX, that's the pin that pops the illusion. Once counterparties realize the metal isn't there, confidence evaporates. And when confidence evaporates, the entire edifice of paper finance comes down. So yes, silver isn't just poised to move, it's ready to explode. And it won't be polite about it. It'll be violent, dislocative, and fast. When I talk about this, some people say, "Andy, you're exaggerating." And maybe I am. But tell me, where am I wrong? When the US reclassifies silver as critical, when China bans exports, when Russia and India hoard, when COMEX deliveries break records, when industrial demand outpaces mining output, when refiners can't keep up, what part of that sounds sustainable? This is confirmation of everything we've been saying for years. It's not a conspiracy, it's math. The supply is finite, the demand isn't. That equation doesn't balance. And when you add in the psychological element, the panic that sets in when people realize they can't get what they thought they owned, that's when the fireworks start. So what can you do? Well, you can do what the insiders are doing. Get physical. Get it while you still can. Because once this next phase begins, premiums will skyrocket, inventories will vanish, and you'll see headlines like, "Silver shortage disrupts global supply chains." You'll see tweets from frustrated investors. "Tried buying 100 ounces of silver, back-ordered for 8 weeks. My dealer just canceled my order." No inventory. And the same mainstream analysts who mock silver will suddenly become experts, explaining the crisis they didn't predict. We've seen this movie before. In 2019, when gold was reclassified under Basel III, it legitimized institutional buying. It didn't matter what retail investors thought. The central banks had already positioned. The same playbook is now unfolding in silver. The insiders move first. The reclassification is the public announcement. Governments have lit the fuse. And once that spark hits the powder, once investors realize that the West has been exporting its silver for years and now can't get it back, you'll see the biggest short squeeze in modern financial history. This isn't about silver going to the moon. It's about silver returning to fair value, monetary value, after decades of suppression. And fair value isn't $50. It's not $100. When you account for inflation, industrial scarcity, and monetary realignment, fair value could easily be 4 figures. I know that sounds crazy, but so did 4,000 gold 20 years ago. So, buckle up. We're not just entering a bull market, we're entering a reset, the repricing of truth itself.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.